include she's a co-founder of Wells Fargo's private mortgage banking division, which now originates annually about 15 billion in loan volume a year, so that's fantastic. And as well as acting as the financial products manager nationally for Piper Jaffray. She has worked with over 170 financial services companies since 1997. It is our great pleasure to welcome back again to the stage, Shelly Schweiso.
Well, I want to start off by saying, because I love to say it when I come to Hawaii, warmest aloha. I have to tell everyone, you have to say it back to me, right? Yes. I love coming here. I have been having the privilege of attending this conference now for 3 years in a row. And when I got off the plane last Thursday, I'm always excited when I get to the island, you know, because it's so beautiful and the sand is so gorgeous, the water's so warm, but most importantly, it's the people in this room that I love to work with. I have never, in my life, I have told so many people the aloha spirit of how you do mortgage banking here is very, very prevalent. And I tell that story when I travel in all the different states that I go to in the Pacific Northwest. This is a very special group. And it's the way that you share with one another that I find to be very unique in the industry. And when people were talking earlier today about, you know, the fighting and people battling for market share and such, there is a different spirit here, and it is very prevalent amongst this group. So I really commend you for that. But I got off the plane last Thursday, and last year I saw, you know, a lot of people working out swimming in the ocean, not just kind of bopping around for fun. You know, they had swim caps on and their goggles, and they're really doing a full workout. So I had this goal this year when I arrived. I said, this year I'm bringing my swim cap, my goggles, and I'm going to use that as a way to do my exercising. So I get off the plane. Okay, I've got plenty of time today. That's what I'm going to do. It's going to be great getting off the plane, getting in the water, and I get to the beach. And I had a goal that I'd seen the year before, and it was this windsock that I saw a lot of other people swimming out to. So I thought, I can surely do that. That's a great goal. A lot of other people I had seen doing it. I thought, that's very reasonable. So I get off the plane, I get to the beach, I'm all ready to go, and I get to the edge of the water, and I look around and think, well, there's really nobody else doing this today. This is kind of unusual. I remember seeing a lot of people. I thought, oh, how hard can it be? This can't be that hard. So I get out there and I start swimming, and you know, it's pretty tough, you know. And the surf was high, and you know, the tide was up, and you know, eventually, although it took me some time and I had to take some breaks along the way, I made it out to that windsock. So I thought, okay, this is great. I made it to, you know, halfway to my goal. I can make it back. And I'm thinking, you know, oh, but going back is, you know, it's not going to be so bad. I turn around and realize this is the strongest current I've ever swam in my entire life. Okay? And I struggled. I went into the fight or flight, I think, whatever he was describing earlier. I started kind of panicking. I had to take a couple breaks as I was trying to make my way back. But all along, you know, you can see the shore, and I'm thinking, hey, you know, this is not going to be a problem. And, you know, eventually, I did make it to shore. But it was almost funny because I drag myself up. I find a beach chair. There's only one beach chair left, and this gentleman's wife had left, and I just kind of plopped down. I was really breathing hard, and I said, I know someone's probably sitting here, but I really need to sit down. And he kind of laughed, and we started talking. And all of a sudden, I look up, and on the edge of the beach were these huge signs that somehow I just didn't notice that said, advisory today, strong current. Gee, I wonder why no one else was swimming. So I had a little bit of a a lesson, but it kind of reminded me as I was sitting on shore, and you know, you get the warmth of the sand here, the sun on your face, and it's so beautiful, but don't you feel like that's the kind of the strong currents that we've had in the mortgage industry these last few years, right? It's been, you know, we finally made it through the financial crisis, but all of the regulation and the increasing complexity that we've had to deal with, most recently this past year, TRID, now, you know, this week was ULDD phase 2, right? And I know somebody in the audience here that's a client of ours, you know, talked to me about that today. That was another hurdle, you know, that we've had to go through this week. We've got HMDA, you know, coming. There's always something, right? We have current after current coming after us of how, you know, we have to struggle in our business. But you know what? We persevere as mortgage bankers, right? We're kind of that kind of a crew where we just persevere and persevere till we make it to the other side, and that's definitely what we're known for. I do have to give you that little bit of an elevator pitch about the Federal Home Loan Bank system, and then I really want to talk today and have a conversation about building strategy for a modern mortgage experience, and that's what I'd really like to talk about today. But we are definitely the lesser known of all the GSEs out there. So obviously Fannie and Freddie is prevalent at the conference, and you guys know, who Fannie and Freddie is, but a lot of people don't still know about the Federal Home Loan Bank system. So I always like to take a couple minutes, and after, hopefully probably by next year, you guys will say, hey, we already know what you do, lady. We get it. But the Federal Home Loan Bank system, there are 11 of them in the country, okay? And we were born out of the Great Depression in 1932. And the whole primary mission of the Federal Home Loan Bank system is to provide low-cost funding. That's our mission, okay? And that's how we got started. We are a GSE, so we're like Fannie and Freddie, but our members own us. And guess what? Congress gets to decide who our members are. And today, those members are banks, credit unions, and insurance companies. So earlier today, when we had an opportunity to talk to Dave Stevens of the MBAH, which by the way, I don't know how anybody else feels, I feel he is the best MBAH president we have ever had in our industry. Does anybody else agree with that? I think he has been just amazing for our industry, and we should all let him know that. I think he's made great changes in our industry and has just raised the bar of how he represents us. But, today, there's a lot of people that would like to be a part of the Federal Home Loan Bank system, and Congress can make that change. So I would tell you, get involved in advocacy. And Rob brought that up today. Advocacy in our industry is very important. And independent mortgage bankers, in my humble opinion, should be part of the Federal Home Loan Bank system and have that same access. So if we get after it with good advocacy, I think we can make it happen over time. We would love it at the Federal Home Loan Bank, just so you know. We're not the gatekeepers on that. That's Congress, and we would love to see that happen. Here is all the 11 Federal Home Loan Banks throughout the country. If you're curious, you'll notice Federal Home Loan Bank of Des Moines, which is headquartered in Des Moines, Iowa, that represents Hawaii, is the largest footprint in the nation. We have $120 billion in assets, and we operate a 13-state region. So we have over 1,500 members that we're currently serving, including you in Hawaii. The Mortgage Partnership Finance Program really didn't start until 1997. And 9 of the 11 Federal Home Loan Banks came together to form that. And we came together to be an alternative to the secondary mortgage market. So we're an alternative to Fannie and Freddie and that secondary market agency access. There's 2 ways that we purchase loans. We buy them and we place them on our own internal balance sheet, and then we have pass-through relationships. So we have a pass-through relationship with Fannie for our clients that need that. We have also a pass-through relationship with Ginnie Mae. Okay, that's enough of my elevator pitch about the Federal Home Loan Bank. So hopefully next year you guys will be pros at what the Federal Home Loan Bank is, and you'll say, hey, we already know what that GSE is now. So let's talk about the new normal. We have really undergone unprecedented changes and challenges in our industry, right? I mean, it has been one thing after the other. And really, we've had to focus more on operational excellence, in the past 2 years in particular. versus really looking at how we serve our customers, okay? Customer satisfaction hasn't been as high on our list because we've had to put all of our resources into building out operational excellence to meet the regulatory requirements that we've had to, kind of suffer through. So one of the things that I've been talking to people about is, have we kind of gotten too battered and beaten down by the U.S. housing, bus that we went through, where we really can't take the time to focus on our existing customer relationships? There was a very interesting study that Carlisle and Gallagher did, a consulting group, and it was a big U.S. consumer survey. And what they found was that most, consumers, and it's kind of a sad statement, said, you know what, and I think this kind of gets to what was just said. Hey, I view this as a transaction. If I could just go to Walmart and get a mortgage, I'd be just totally satisfied with that. Well, as lenders, we don't want to hear that. We're so deflated and disappointed to hear something like that. That's just not, what we want to hear at all. But here's what was also the most intriguing part of the survey, and this is what sparked my attention. 89% of the people surveyed said, I love my primary financial institution, but only 39% of people actually had their mortgage with that primary financial institution. But then the survey also went on to say, well, if your primary financial institution could provide you a mortgage, would you be interested in that? 70% of the people surveyed said, absolutely, absolutely. So what does that tell you? We have a huge opportunity within our own wheelhouses to go after and satisfy and find these existing customers and deepen these relationships. And I think we've gotten great ideas today as to how we can do that, but there's a huge opportunity for us to go after that business. In the new normal, there's a power shift that's really taking place in the markets today. What's happening is that financial institutions, they can't rely on price and product anymore. That is absolutely not enough. Consumers want choice, transparency, service. They are only going to remember you if they have a customized, memorable mortgage experience that makes them, want to come back and have an ongoing relationship, okay? We can't just win them over with price and product anymore. That's just not enough. But it starts with kind of this situation where we do have to figure out and understand today's borrower. And I think this last presentation really highlighted some of the changes that we're seeing with today's borrower. But our markets have changed. This regulatory environment that we're in, which is ever increasingly complex, you topple that with increasing consumer demand. And oh, by the way, we've got a digital revolution all taking place at once. This is leading now to a host of a lot of new entrants. Rocket Mortgage is one of them. But guaranteed rates online mortgage is one of them. There is a lot of new entrants that are coming, and there will be more to come. And we have to think about how we are going to succeed and grow and have sustainable growth in the future with a lot of these new entrants and how we have to meet the demands of this new consumer. Last year, you might recall, we talked about the fact that online was definitely on a roll, and we had some statistics. And PricewaterhouseCoopers did a second study after I was here last year. And what was very interesting about their second consumer study on lending is that the demand for online has really grown significantly, even from 1 year ago, as to where we were at with what consumers were demanding, okay? The majority now of all consumers want an online experience, particularly for applying for the loan, doing their research, a lot of the initial things, all the way up to the closing now. They want some type of online versus just traditional application method. And this runs across all 4 asset classes of borrowers, whether it's millennials, Gen X, baby boomers, even our silent generation, it's amazing how many people are going online. One of the things that I've kind of asked people about recently is for even those of us who are not millennials, and I'm certainly not a millennial anymore, when you're interested yourself in looking at real estate in a community, let's just say you're on vacation and you're having a great time, you're thinking, wow, this would be a neat area to live. What's the first thing that you do? You go online. You use your smartphone. Are you calling a realtor first? No, people aren't doing that anymore, okay? So there's a big change across all types of generations nowadays in regards to how we are looking at the marketplace. Now, millennials are accounting for a huge market, part of our market share. I think somebody had the statistic earlier today, was it 32% is now the statistics of new loan apps, or Holly's not in her head, about 32%. But one of the things that I found very fascinating was that in the PricewaterhouseCoopers Consumer Lending Survey, they identified that this segment of our borrowers, they're not having a very good experience with us. And I really wanted to bring that out today to kind of highlight that I think there is a need for better education and communication with this type of borrower. Because they're telling us, 58% of them are telling us they didn't understand what was happening with their process. They really didn't understand the terms of their mortgage or the options that they had, okay? Were we telling them about all the different types of options of financing that are available? Or were we just selling them a 30-year fix because it was quick and easy and we know they're at a historical low, okay? They want to feel like they want to feel better educated about the process that they're going through. So we do know that that is something that we need to address. Obviously, they want a digital experience. I mean, that's obvious to probably most any of us in today's marketplace. And why is it obvious? Well, just think about it. Everything that they do in their life has a frictionless kind of pattern to it, right? They can pick up a smartphone, they can order a cab, they can order a pizza, they can do whatever they want without any human contact. In their minds, logically, why should getting a mortgage be any different? Okay? So we have to start thinking about that, what they're, how to align ourselves to really meet that requirement so that we can compete in today's marketplace. And obviously we know, Prime Now, that was an example that was brought up today, Uber. These are all examples of this frictionless, appetite that this type of borrower has for the type of lending experience that they are looking to us to meet in the marketplace. So we've got to meet those expectations. The other thing that we learned, and this came from the J.D. Powers origination survey this last year, is that, and Steve said this too, people want a fast process. They want it fast and easy, okay? And yes, we've got to redefine what fast and easy is in our industry. There is no doubt about it. But we've got a significant headwind. We got those currents of TRID and all the regulatory complexities that we have to master right now. And that's really fighting us, right? And how can we provide a fast and an easy approach to mortgage lending when we've got these headwinds? And so we are faced with a kind of a perfect storm situation where we've got to figure out how to yes, we've got to define it, but we also have to figure out how we can deliver it. Because at the end of the day, that's what the consumer demand is. And whoever in our industry is an entrant who can meet that demand, guess who's going to win, right? And we've got to compete in that type of an environment. Also in the J.D. Powers origination survey, they talked about the fact that yes, we do have to work on better education and communication. I think we all can see that that needs to start with this first-time home buyer, the millennial generation. We've got probably an opportunity. And again, I think we got to put a positive hat on it. I think that's an opportunity to go after non-customers and build market share. You know, it's an opportunity for us to educate and to win that market segment, okay? But it all can be impacted by our communication. And that's an exciting opportunity for mortgage bankers, right? Because that's something that doesn't require great technology, doesn't require huge spend on fancy technology. Good old-fashioned communication and education is something that this group of people in this room are absolutely capable of and can do without a lot of dollars spent. And so let's look at exactly how impactful you can be. Number one, Mary was here from the CFPB. Does anybody in the room know what the #1 consumer complaint is on mortgage, in the mortgage side of the business with the CFPB? What's the #1 complaint that people write in and they talk about? Okay, one gentleman says not having the details. Anybody have anything else? No calls back. Okay. I think you're all going to be surprised when I tell you what the #1 complaint is. They don't know where to send their first payment. Now, don't you all laugh by that? I did. Because I thought, wait a minute, we have great mortgage closings. What do you mean you don't know where to send the payment? You got a first payment letter in your closing package. How could you not know? I was there. I saw you, sign the papers. Okay? But think about the experience of going to closing, right? It's overwhelming. They've got 80-some pieces of paper to sign. They're a little stressed out. Maybe it's their first experience. Well then, oh gee, by the way, they get into the car, then they gotta move. If it's a purchase, they gotta move, they gotta relocate, they gotta unpack boxes, they're exhausted. They don't remember where to send their first payment. Is that something that we can solve in our industry with good communication? Great opportunity. Why not, all of us set a goal? Hey, we can turn that around with the CFPB customer complaint department right now. Set a tickler. Let's call the borrowers when their first payment is due. And oh, by the way, when you call them, oh, gee, do you have any friends or family that can need a mortgage? Because, gee, interest rates are still really low. It's a huge cross-sell opportunity to get more business. So I think that's an exciting opportunity. We have to look at these type of opportunities as, ways to grow our business. And I think that they're all out there. The other thing that I would mention is the other thing that we know is that in the J.D. Powers origination study, they tested the fact that satisfaction drops significantly when our timelines go beyond 60 days. Okay, so if you've got an origination file, it's going beyond 60 days for whatever reason, your satisfaction drops to, like, on a scale of 1 to 1,000, 656, which is pretty low. But what they found is that if loan officers called and provided updates and provide proactive communication along the way, you can move that score all the way up to 859. That is a significant change. Loan officers are absolutely vital to our industry. You can make a significant difference in what? The customer experience and their satisfaction. And that's going to keep them coming back. So as the number of millennial buyers continues to grow, we know that mobile apps are going to be really important. And so we have to figure out what do borrowers want on these mobile apps. And to be honest with you, as we look across the industry today, one of the things that came out of the PricewaterhouseCoopers consumer lending study is we're not meeting the bar. Borrowers are not getting what they want today with mobile apps. They want to be able to lock, okay? They want to be able to compare products. They want to look at affordability. They want to calculate, what their affordability is. They want to use it as a mechanism to get educated about the mortgage, okay? And probably, how many people have got mobile apps that can do all those things today? at their institutions? Anybody? Okay, point taken, right? We've got some work to do on this. And these are opportunities that we need to think about what our strategy is and what our long-term plan is. Because otherwise, how are we going to meet this demand? We're vulnerable. So here's some examples of the types of apps that people are looking for. We kind of talked about them. I think what's also really important is that we can use these apps to create deeper relationships. You know, wouldn't it be great, obviously, to have our apps work on, you know, status of the loan, where we are at in the life cycle of the loan, you know, all those type of things. But I think more importantly, these apps can take us beyond the transaction that we're just trying to do over that, you know, 30, 45, 60-day time period. I think what is really possible with these apps is to create a customer relationship for life, okay? That's where a really neat goal could be. And how do you get there with that goal of creating a customer relationship for life so that you just get beyond the transaction? Well, you actually start looking at what other types of things on that app that you could provide. So in other words, budget tracker, okay? Financial management tools that that borrower could really use to try to figure out where they're headed, you know, next. Whether it's goals to pay down the mortgage, you know, other things that you discuss with them, you know, more financial management tools that will actually help them in their life. So one of the things that I want to share with you is that hot off the press at the National 2016 MBA Tech Conference. Rob, were you at that tech conference? So this is I'm going to share with you guys a video that I was really inspired by. PricewaterhouseCoopers actually put this together. And all of the technology that you're going to see in today's video is available right now today in the marketplace. Okay? And many people that I talked to anyway that came away from the tech conference, they believe strongly that this is very, very possible what a borrower experience will be over the next probably 2 to 3 years of what their borrowing experience is going to look like. And I thought it would be fun to share it with you. And then I want to see what you guys think about it and have a little conversation about it. So with that, it's about a 3-minute video. We'll play that and we'll talk about it a little bit. She's my Vanna over here. I think is the volume or the audio. So we can't hear any audio. Don't worry, we'll start at the beginning if we have to. A few minutes. Thanks for being so patient. Boy, it's like the anticipation now of this thing is like, holy cow. I don't want you guys to miss it though, so you can just bear with us a couple minutes. We'll see if we can get it going. We tested it earlier and it was working. All right. Yay!
Hey Ben, Should I keep renting? What's an average down payment? How do people like me buy a house? So how do I get started? I can do that. Transfer 200 to savings. Skip the coffee shop.
I'd love to live here. Ben, how much are homes going for in this area?
This one, maybe this one. Thank you. This is it. Hey, man. How are you? Come on in.
Thank you.
There's a real Ben.
Found a house.
This one's my favorite.
Well, I calculated your total costs, and I'm glad to say it's within your budget.
Let's sign some paperwork. So, Ben, what's next?
So the first thing I want to ask everybody is, did you notice anything maybe unexpected about her experience as a first-time homebuyer and the path that she went down and what transpired? Anything? Does anybody notice anything in particular? A lot of digital. Yeah. Do we have any Bens? So the thing that got me kind of excited when I saw this, that I wanted to kind of share with you guys, is that where did the realtor come into the show? Where were we in the beginning, right? Ben, the advisor. Okay? Now she had an online experience with Ben, and it was digital, and it was smartphone and stuff, but it all started with education, okay? What did she need for down payment? How was she going to put it together? And she had a trusted advisor. That's what this room is made up of, is trusted advisors. I think that we are in for a sea change in our industry. And I think it is the most exciting thing that I personally have seen in 20 years. Because you know why? What is the holy grail of mortgage banking? Realtor referrals. If you can give realtors referrals, that is the holy grail. You will have so much business in Honolulu, they will be, lining up down the street to do business with you, okay? So I think that's why this is exciting and why we want to embrace where the market is headed, because we as the trusted advisor can be at the forefront and can drive those where that business can be referred out. So I think that's what's exciting to me, and why I wanted to share that with you guys. So thank you for taking the time to do that. So let's face it, the world's changing at a faster and faster pace. It's becoming more and more challenging. I don't know if it'll go forward without you guys. You might need to hit the button for me to move it forward. See, I got to get better at technology now. Oh, now we're at the beginning. Okay. So, John Cotter, who's a leader in change management, he really talks about the fact that to win market share in today's world, it's going to take a lot more than price of product, guys. It's just going to take more. We've got to win the hearts and minds of our customers. That's what's going to be important. And the renowned authors of a book that I just absolutely love that I wanted to share with you, it's called Blue Ocean Strategy. They looked across 100 years of work, or 100 industries over 30 years' time. And what they learned is that everybody was battling it out for market share, doing the same thing. So, and in mortgage, that's true, right? We're all battling it out, doing the same thing because we compete in what they describe in the book as kind of bloody red oceans, right? We're all competing, doing the same exact thing. We've got the same behavior, the same exact thing. And one of the things that I promised Rusty, because he's trying to get the whole thing back on track today as far as schedules, I'm not going to show everything about Blue Ocean Strategy, but I'll show you this video about it. It's a way for you guys to start thinking about building strategy and creating uncontested market space, okay? And it starts by identifying a trend. And does everybody know the whole, history about why Apple iTunes was created? It was because of illegal file sharing. Illegal file sharing in the early 1990s exploded. By 1993, there were 2 billion illegal file downloads of music per day. And all the music industry people are fighting. They're back again to that whole concept of fight. But they weren't winning anything. They weren't going after something. And what Apple did is they created a blue ocean, a new way of approaching business, going after uncontested market space with a whole new strategy of how to buy and download music. And they changed the music industry forever. That's what Blue Ocean Strategy is about, okay? And this is a little video that'll show you, that'll get you hopefully a little bit excited about thinking about Blue Ocean Strategy in Hawaii. I'm putting them to the test today. about the framework, okay, that you can use for Blue Ocean strategy. And I'm going to skip ahead a little bit because I promised Rusty I'm going to try to keep him getting ahead of time a little bit. So, what you do with the concept of Blue Ocean strategy, it's all about creating new demand, reducing things that, you know, are definitely could be sold, you know, below your industry standard, eliminate things that are taken for granted, raise things that can be sold to a premium, right? What does this all mean? It all sounds kind of, you know, convoluted, and it's a little bit hard to understand how you would actually do this. But really what you're trying to do is go after your non-customers today. Who are your non-customers today that you're trying to go after, okay? And let's use Rocket Mortgage as an example. And I know Rocket Mortgage is super controversial. When they came out in November 2015 with Rocket Mortgage, was everybody in our industry kind of poo-pooing it, right? We were like, yeah, push button, get mortgage, you bet, right on, let's all do that, okay? But their technology innovation team worked tirelessly for 3 years to rebuild their entire back office. #1 customer satisfaction, J.D. Power's origination survey, 2015, guess what? Quicken Loans. They continue to be on top, and that was for the 6th year in a row. Because they're doing this. They're looking at uncontested market space. They're looking at how to change our industry and how to address these things. So what did they do? They created an online process with instant documentation verification. They reduced the cost to originate and the time to close a loan. They eliminated paperwork and, oh, by the way, us, loan officers, brokers, and brick and mortar. And they raised the speed of the process. Now, I think that we all are vital, and I think that we have a great future, but we can also use Blue Ocean strategy and the same type of framework to recreate our business models for the future and to create strategy that will win and sustain profitable growth for the future. And so this is just an example of how they approached it, but a framework that you guys can use to actually approach and do some strategic thinking of your own, whether it's in your own personal business as a loan officer or within your financial institution, really thinking about where the change can occur and where you can grow. This is a battle for the mortgage value curve that you can actually test your strategy to figure out, how am I going to compete against traditional, brick and mortar brokers, etc., to kind of think of what the value is to the consumer at the end of the day. Once you think of what your strategy is, be sure to test it. Look at, am I driving down costs? Am I building a business model that's differentiated? And another great test that I really think is important, do you have a compelling tagline? I think Rocket Mortgage hit it pretty hard. Push button, get mortgage. We all know that phrase now, okay? Do you have a compelling tagline that you're known by when, your consumers are thinking about you or the institution that you work with? That's a really good test to figure out, are you on the right track? So, instead of just, dealing with the know before you owe, mandated terms that we all have to deal with, guys, let's embrace it, Provide these borrowers choice, transparency, service. Let's give them what they want and show them what we're capable of. And then we're going to have unbelievable loan officers behind it to communicate and to, even deepen and expand that relationship of where you can go into the future with that customer for many, many years to come. And so that is some ideas for you guys, and with that, I want to get it back to Rusty, because I know that we want to try to get everything back on track today, because we're all between you and this fabulous cocktail party. Thank you so much for your time.
Thank you, Shelly. Big round of applause. Shelly Schweiso, fantastic information, and I apologize if we were hurrying you a little bit, Shelly, but that was a fantastic presentation. We're going to